decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Welcome, everybody. This is Peter Schiff on a historic Monday morning following the S&P downgrade of U.S. government debt to AA plus from AAA. And, welcome to the Twilight Zone. Global markets are selling off. All around the world, stocks are getting hammered because people are worried about a downgrade of U.S. Treasuries. But what are they doing? They are buying U.S. Treasuries. U.S. Treasuries are rallying, which means, what is everybody worried about? After all, if U.S. Treasuries are more attractive today at AA plus than they were Friday at AAA, what's the problem? In fact, maybe we should have some more downgrades and really generate some demand for U.S. Treasuries. The whole thing is ridiculous. The only reason that you would be concerned about a downgrade was because it would impact the bond market. It would make U.S. Treasuries less attractive. They would fall. Yields would rise. Higher interest rates would undermine the U.S. economy. If interest rates are not rising, in fact, if interest rates are falling because of the downgrade, why is it a problem? Well, I think the truth is that the reason bonds are rising is because central banks are buying. The Bank of China, the Bank of Japan, they are backing up the trucks. The dollar would be collapsing right now against the yen if the Bank of Japan weren't intervening. Last week they bought $50 billion. They're going to put those into treasuries. The U.S. dollar hit a record low last night against the Chinese RMB. How many dollars did the Bank of China buy to stop the RMB from going even higher? They're buying treasuries. What about the banks? I think the banks are ending up buying treasuries because the economy is weakening. More bank reserves are being funneled into the treasury market, probably because bank profits are so much under pressure. Look at the bank stocks. Look at them getting clobbered. Things like Bank of America, 52-week lows down 8% today. Citigroup, 52-week low down 5%. The banks are getting hammered. The investment banks, Goldman Sachs, 52-week low. I bet because of the deteriorating U.S. economy, banks that might otherwise be making loans to businesses are simply putting more of their excess reserves into U.S. Treasuries. Not because they're so much higher quality, but because there's nothing else to do with their money and they need to make profit somehow, no matter how much risk they take by owning long-term bonds. Of course, the crazy part, too, about this is S&P is the lone credit agency with the balls to downgrade U.S. Treasuries. And what does everybody do? Attacks S&P. Oh, these guys don't know what they're doing. They've got no credibility anyway. Look, they missed the subprime. Take a look at Moody's and Fitch. They still have us as AAA. Well, wait a minute. Moody's and Fitch, they missed subprime too. So why do they have credibility when S&P doesn't? The fact is S&P is learning from its mistakes. They should be credited. Moody's and Fitch, they haven't learned anything from their mistakes. And, the administration is accusing S&P of doing bad math. They're the ones that did bad math. I mean, S&P actually used the baseline assumptions by the CBO. Those assumptions are absurd because they're based on economic growth and inflation and interest rate expectations over the next 10 years that are pure fantasy. They're never going to come true. In fact, the real fiscal picture for the United States is far blacker than what S&P is painting it. They still got us as a AA plus. That's crazy. What's even crazier? China is a AA minus. How can China be rated lower than us? We owe them $2 trillion. China basically has no debt. In fact, the only way China would default would be if we defaulted first, because they got $2 trillion in reserve, $3 trillion if you count all their foreign currency reserves. Now, maybe they think, well, you can't trust China because they're commies. Well, can you trust us? I mean, when it comes, we just threatened default a week ago. We just said if we didn't raise the debt ceiling, we were going to default. I mean, China never threatened default. The whole thing is absurd that the world's biggest creditor would have a lower credit rating than the world's biggest debtor. And, of course, the absurdity really kicks into another gear when you have all the big guns that are being brought out. Warren Buffett, Alan Greenspan, hitting the airwaves, hammering S&P and talking about how great the U.S. Treasuries are. Warren Buffett actually said that he thinks Treasuries should be quadruple A. Now, Warren Buffett also missed the financial crisis, so why does he have credibility? In fact, his insurance companies probably would have gone bankrupt without the bailouts of the financial sector. But, of course, he also has a dog in the hunt. Warren Buffett is a major shareholder of Moody's. So, basically, if S&P is right, Moody's is wrong. So Warren Buffett is defending his own company by criticizing S&P. And look at Alan Greenspan. And Alan Greenspan's comments pretty much being repeated by a lot of so-called experts. Listen to why Alan Greenspan says that we've got nothing to worry about, that S&P was wrong in downgrading our debt. This is cut number 3.
Are U.S. Treasury bonds still safe to invest in?
Very much so. I think this is not an issue of credit rating. The United States can pay any debt it has because we can always print money to do that. So there is zero probability of default. What I think the S&P thing did was to hit a nerve, that there's something basically bad going on, and it's hit the self-esteem of the United States, the psyche. And it's having a much profounder effect than I conceived could happen.
So, in other words, according to the illustrious maestro, there's nothing to worry about. U.S. government should still be AAA because they can print money. Well, so can every country. I mean, every country has a printing press. I saw that again on CNBC. Joe Kernan, one of the anchors, basically said that S&P has no business downgrading treasuries, because, we can print money, and what they're really downgrading is the dollar, which is true. And he says they have no business looking at the currency. Of course they do. That's all they should look at is the currency. I mean, after all, if simply having a printing press means that you're AAA, why do we even have rating agencies? Why don't we all we need is somebody to make a phone call to call up a country and make sure they have a printing press. And if they say, yeah, we got a printing press, I guess we can ask, well, is it working? Do you got plenty of paper? You got enough ink? Okay, you're AAA. I mean, this whole thing is absurd. By Alan Greenspan's definition, or Joe Curdon's definition, or Warren Buffett's definition, every African country should be AAA. Every country in Latin America should be AAA. Hey, Zimbabwe should be AAA. They're not defaulting. They're paying what they owe in Zimbabwe dollars. This whole thing is absurd. When you are rating sovereign debt, of course you are rating the dollar. And, of course, what is happening to the dollar today as a result of the S&P downgrade? It's rising. The dollar index is up 0.24. It's not surging, but the fact that it's not collapsing is ridiculous. Now, it is collapsing against real money, though. Look at the price of gold is up $40. Now, why is that happening? Why is the price of gold up, but why are other currencies down? And that's because of intervention. Central banks in other countries, in order to keep the S&P downgrade from killing the dollar and killing the treasury market, they are intervening. They are throwing good money after bad. They are buying dollars. They are buying treasuries with money that they print. But the one thing they can't print is gold. And that's why gold is the ultimate safe haven. Gold stocks are also up today, but they are barely up. The Huey index is up 1%. Despite the biggest up move in the price of gold in years. In fact, at one point this morning, it was up better than $50 an ounce. Silver is up over $1, but still way underperforming gold because of the industrial components to silver. Anyway, don't go back. We will continue with the Peter Schiff Show on SchiffRadio.com.
The Peter Schiff Show.
It's clear to just about everybody that the global
The national debt added another $7.89 million. Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Well, welcome back, everybody, to the Twilight Zone, where U.S. Treasuries are rallying on the fears regarding the downgrade of U.S. Treasuries. In fact, the yield on the 10-year is now all the way down to 2.4%. This is the lowest the yield on the 10-year has been since, let me go back on this chart, since, when is this here? October of 2010. And it looks like maybe, well, who knows, maybe we'll take out those lows. Treasuries are more valuable at AA plus than at AAA. Hey, maybe S&P ought to downgrade them again. It looks like the S&P did the U.S. government a favor because by lowering the credit rating, it actually reduced the cost to the Treasury. In fact, Warren Buffett actually said he would be willing to buy Treasuries if they yielded zero. Maybe we ought to give it a try. Maybe we ought to just completely suspend all interest payments on Treasuries and see if Warren Buffett still buys them. Maybe the world will still buy them. Think about all the money we'll save the taxpayers if people are dumb enough to buy our debt. In fact, if Warren Buffett will buy our Treasuries, even if they pay no interest, how about if they don't pay any principal? I wonder if he'll still buy them. Anyway, the Dow Jones is now down 305 points. The NASDAQ is down 85 points. That's 3.33%. So it looks like we're making new lows on the day. And as people sell the stock market, they are buying the bonds, even though the reason they're selling the stock market is because of the concern about Treasuries. So then they sell their stocks, and where do they put the money? Right back into Treasuries. It really is unbelievable, and you wouldn't believe it if you hadn't seen it. But this has got to be a knee-jerk reaction. I don't care that the dollar index is up today. You know, it's barely up. You know, if this was 2008 and the Dow was down 300 points, the dollar index would be screaming. So it's not screaming. And gold, you remember in 2008, when the Dow was down 300 points, gold was down $50. It wasn't up $50. So things are changing. My brother wrote an article about that on Friday. They're changing at glacial speed, but they are still changing. And S&P, though they're behind the real curve, they're certainly ahead of the curve when it comes to other rating agencies. But anyway, let me go to the phones. The number to call is 855-4SCHIFF, 855-4SCHIFF, if you want to join the discussion. On hold is Brendan in Los Angeles. Morning, Brendan.
Hello?
Or Brenda, rather. Yes, go ahead.
Yes.
Hi, Brenda.
My questions, I have two questions, and they have to do with crude oil. The first question on crude oil would be, how do you see it, the price, short-term, long-term, and where do you see, price going short and long-term? That would be my first question. The second would then apply to the stocks, short and long-term, and also not just the United States, but like Australia and Canada.
Yeah, well, right now oil's down about $2. It's about $83 a barrel right now. 84 actually, 84 and change. In the short run, oil is responding to the global economic contraction, but in the long run, it's going to respond to the global monetary expansion. And I think oil prices are going higher, particularly when the Asian central banks give up the ghost and stop throwing good money after bad, which they're clearly doing right now. They clearly haven't learned from their mistakes. So that's putting pressure on oil. It's also putting pressure on foreign stock markets. I believe if foreign governments really let the dollar tank, that foreign stocks would rise. Because remember, the correlation that exists right now is when the dollar goes up, stocks go down, and when the dollar goes down, stocks go up. So if the world really let the dollar collapse, which it could easily do, that would be bullish for global stocks, particularly when you express the prices in U.S. dollars. And that would also bring down commodity prices for everybody outside the United States, while bringing commodity prices up dramatically for everybody within the United States. And what that would mean would be the world would all of a sudden have a much greater supply of resources with which to generate or power its own economic growth.
I see. Okay. So therefore, then, the Australia and Canada, the oil stocks will perform pretty good.
I think the foreign stocks will. Just imagine how much better off the world would be if they had all the oil that we were consuming. Imagine if we consume something like 40 or 50% of the world's gasoline. So if we didn't consume it, that would mean everybody else would get to use it. I mean, it would be a bonanza. Think about all the products that we're buying. What if the world had those products instead of us? I mean, everybody's life would be better. Of course, Americans' lives would not be better, but that is the future that awaits us.